Hello and welcome to Building the Premier Accounting Firm. This is a podcast dedicated to helping individuals successfully run and operate accounting, bookkeeping, and tax services. This show is dedicated to helping accounting professionals confidently and competently offer quality accounting services to get paid what they're worth. And in each of our episodes, we have a conversational discussion about tips and tricks that you can apply in your business to literally improve what it is that you're doing for your clients, such as taking care of them, retaining them, obviously providing quality services, practice management, staff training, onboarding the client. With regards to this, we'll also tackle topics such as pricing, marketing, sales, and a variety of things to help you work on your business. Now, as your host, I'm Roger Knecht, president of Universal Accounting Center. For more than 20 years, I've been working with accounting professionals to help them both start and build successful accounting businesses. I've done this not only in the United States, but around the world, and I look forward to working with and meeting new individuals all the time who are in the process of working on their businesses. So whether you're starting or building your company, whether it's a solo entrepreneur practice that you're operating or one with a number of employees with various offices, this is a podcast dedicated to you and your success, and I look forward to getting to know you in the future. Today, we have a special guest, someone that I've known for a while, I've met recently, and I'm excited to have on the show. It's Jeffrey Bangerter. He's been working in the financial services industry since 1979, helping his valued clients prepare for and enjoy comfortable retirement. Jeffrey has spent the time necessary to get all the licenses needed to be able to put together a proper plan. He is an enrolled agent, a tax professional, obviously, mortgage loan originator, investment advisor representative, registered security representative, insurance agent, and has his real estate license as well. He empowers his clients with knowledge to help them make smart, informed choices as they enter their golden years, making things easy to understand so that it becomes clear the direction that they should be taking. His goal is to help people maximize Social Security, create incomes, provide professional money management, and protect their assets from long-term care. Now, with this, his clients actually know him and his team are committed to providing the best solution for their individual situations, utilizing their Social Security planning and retirement planning software together to make sure that they don't have a point in their life where they run out of money. Now, Jeffrey has been seen frequently on Sacramento's ABC and CBS affiliate TV stations, providing timely financial information in an easy-to-understand format, and he'll provide that here in the show today. Jeffrey has also been a resident of Orangeville, California for over 25 years. When not helping his clients exercise confidence about their financial futures, he's enjoying boating with his 6 children and grandchildren, traveling and learning something new, or spending time with his wife on their Harleys. So, Jeffrey, welcome to the show.
Thank you so much, Roger. Glad to be here.
This is going to be fun. So let's first of all start. You've got a number of accolades, certificates, and various expertises. Why the gamut of all those things? Why did you feel it was necessary to get all those various licenses and certifications?
Well, over the course of my career, they've, just kind of accumulated because I've needed them for different, just part of the knowledge base to work with my clients. For instance, the enrolled agent, I don't do taxes for people. I refer those people to other tax professionals. But I really wanted to know all the ins and outs of how these different products that we offer affect our clients. And it also helps me communicate more effectively with the tax professionals that my clients are working with.
Perfect. Now, give us an idea of how you got into doing what it is you're doing, a little bit of your journey, if you will, through the business sector.
Sure. It's kind of interesting. I actually started in 1978 in title insurance, of all places. Uh-huh. And I would actually go to the courthouse back in the day and look on microfiche and do the actual title search. And it was really interesting for a short period of time and then got really tedious and rather boring. And so I transitioned into the mortgage industry with Wells Fargo Mortgage back in 1979. And for those of us that are old enough to remember interest rates back in 1979, they were pretty high. You'd see, 18% mortgages. It was crazy.
Yeah, double digit.
Yeah. And so I had to make a transition into something else to, feed my family essentially. And so I got involved into the insurance and securities world. But I always retained that real estate. I had my real estate license back then too, but I've always retained that in my, kind of bag of tricks that I worked with for clients. So yes, I handled their investments and insurance, but I also was well versed in the mortgage side and the real estate side and maintained those licenses. And even to this day, I don't sell traditional real estate. We do securitized real estate and 1031 exchanges. So I have my real estate license, but I don't use it in the normal way. I certainly wouldn't list somebody's house or sell you an individual house. Wouldn't even know how to start that process.
Now, there's obviously a transition that occurs when you go from working and doing what you're doing to starting your own business and becoming an entrepreneur. Go back and tell us about what that transition was for you.
Yeah, for me, back in '79, again, I was working for Wells Fargo Mortgage out in Layton, Utah, so north of Salt Lake City ways. And, the industry was literally every day I would have to come in and call people up and say, you no longer qualify for the mortgage we were trying to get you, the $50,000 mortgage on your $85,000 house back in the day. And so I started looking around and I connected up with an insurance company to offer retirement planning. And so the retirement planning was the big aspect of what we were doing. But it was self-employment at that point in time. And so I started part-time and then left the mortgage industry, got my securities license and stayed independent really from 1979 until now. I've never worked for another company or a big firm or anything. I've always had my own shop.
An entrepreneur from the get-go. I like it. So now with regards to your business, it's kind of interesting. Obviously, as accounting professionals, we're dealing oftentimes with businesses and sometimes individuals' net worth. We're helping them make financial decisions, addressing issues such as cash flow management. There's a lot of things going on there. You're in a position where oftentimes you're looking at wealth management. You're getting to a point where somebody has assets to the point that they're now able to invest, let's say. Let's talk about that for a little bit. What is it that you typically see as you interact with accounting professionals and their clients?
Well, really, so we work primarily with accredited investors that own real estate, investment real estate. And so we're dealing with the accounting professionals, the tax professionals, and showing their clients how to do 1031 tax deferred exchanges so they don't pay significant taxes, right? Currently, really 20% in federal capital gains rates. You've got 25% depreciation recapture. You've got whatever your state tax rate is. Net investment income tax at 3.8. It becomes a pretty serious dollar amount. And so we show how you can do a tax deferred exchange, not pay any of those taxes. And from the accounting professional side, the folks that are actually doing tax work, we show them how to do value-based billing. If you could show your client how to save on a $1 million sale, which we have regularly, right? If you could show them how to save $300,000 in taxes, I think it's okay if you charge them, $5,000 versus, $300 or $400 an hour. And so when they start to see the value that they really bring to their clients, then, they can understand they can bill that way as well, right? You don't have to just stick to an hourly rate.
I love it so much. In the accounting world, there's this discussion of offering more value-based services and then accordingly charging for those services accordingly. And what you did right there is give a good illustration of when you have a client that literally, because of your knowledge and abilities, can save, as you illustrated, $300,000. There's a lot to be said for the training, learning, the education, the know-how that really may not be caught up in the time that could be assigned necessary to actually process that. So you're in a situation now where you're literally providing a valuable service that isn't representative of the time that it takes to service them. So that's well described. So let's kind of back up a little bit here, just to make sure that the listeners are aware. Kind of describe what the essence of the 1031 exchange is, why it exists, what's its intended purpose.
Absolutely. So the code, right, section 1031 just says that no gain or loss shall be recognized on the exchange of real property, so real estate, held for productive use in a trade or business or for investment, as long as such real property is exchanged solely for real property of like kind, which is actually really vague. I'll talk about in a moment here, as long as it's held also for productive use in a trade or business or for investment. So when you look at the code, right, most people in the tax industry know it exists, but they don't really know what to do with it. And so what we show them, and it's really more of a relationship thing. They don't have to be experts at 1031 exchange. They just have to know people like me that are. And so if they connect with us and we work with them and their client together to show them how to save, again, $300,000, $400,000 in tax, then if they stay connected through that process, right, then their client, the taxpayer, sees them as the one providing the service instead of just referring them to somebody like me. You want to actually stay connected through the whole process.
Mm-hmm.
And by doing that, then you're again, your taxpayer, your client sees you as the expert, not as just a referral partner.
Perfect. Now let's try and give some scenarios here. I'm trying to basically consider two situations. Imagine an accounting service working with a client, and they're going to have a transaction that's going to cause them to have these gains, the capital gains, let's say. What's a good indication of the 1031 being a viable option or solution to the situation they're experiencing?
Well, the key is that it is investment property, and that is in and of itself, people have to understand. So let's say I'm a dentist or a doctor and I own my building that I have my practice in.
Uh-huh.
Well, I can sell the practice. I cannot do a 1031 exchange with that. There is something else right now available. You can do an opportunity zone fund and defer the tax, and we could talk about that maybe another time. But the real estate part is where you could do the 1031 exchange.
Mm-hmm.
So you could sell that and go into maybe a passive, like a 300-400 unit apartment complex or an Amazon fulfillment center or something where you own a piece of it, not all of it, and you don't have to manage it at all. So when you look at the clients that are really ready to retire from being landlords, we have a great solution. Now, for younger folks that are still trying to amass a real estate empire and they're doing sweat equity and willing to go out and do that kind of work, we're not the right solution for those people, right? So when you're talking to your client, you would really be looking for those clients that are, late 50s to, until death, right? So they're at that point where they're saying, I don't want to deal with this anymore. I've dealt with tenants and toilets and trash and all that stuff, and I'm just done. And that's the perfect prospect for us.
Excellent. Now, let's take, for example, the accountant now working with you. Obviously, they're bringing to your attention someone that has these monies that want to invest. Give us an idea of what that experience may look like from the accountant's point of view.
Absolutely. So what we try to do is, again, make it really simple and consider us just like another tool in your toolbox or arrow in the quiver, however you want to look at it, right? So you would bring a client to us and say, hey, this client has a situation where they own X building and, they're tired of it. They're ready to retire from that landlording position. And then we would meet with them and their client virtually, right? We can do this anywhere in the country. And we would go through how this compares to all of your client's other options, because there really are plenty of options. The client could just say, I'm going to just hold the real estate that I have and continue to deal with it until I die. That's an option. Or they could say, well, I'm going to just sell it and pay all of the tax right now so I don't ever have to deal with it ever again in the future. That's fine. But for most people, when they really do the math and they see that we can save literally hundreds of thousands of dollars in taxes, they look at this and they say, well, I think the 1031 is the best choice. So then we go, great. So again, in this cooperative engagement, right, where we and the CPA or the enrolled agent, the tax professional are collaborating, right, we're going to go through and look at what are their plans for the future. Do they need to take some of the cash out and pay some of the tax? Is this the only asset they have? What are their estate considerations, right? We want to think about, how do you want to structure this so that when you pass, that it goes to the people that you want it to, properly. And what are the client's liquidity needs? So again, just because we can defer everything doesn't mean we should defer everything. Also, what's happening in the real estate market, not only in the local area where the client owns real estate, but in where we might recommend they buy real estate.
Mm-hmm.
I'm in California. Our market's, just insanely high. I mean, it is high everywhere in the country right now, but I think that everybody realizes you should be a net seller out of California and probably taking your real estate into places like Utah, Idaho, Texas, Florida, North Carolina, and so on, right? And so we want to have that conversation. Now, it should also be involving the client's real estate agent and probably their family members, right? So that they know that this is a solution that works for all of them, or if there's some concern that it doesn't work, then we're fine with that too. We want to make sure that it's the best solution for the client. And so as a tax professional is working with, or any kind of partner that we would work with, we want them to realize we're not going to tell the client just to do this just so we can all make some money. We're looking at what is absolutely the best solution for each individual client. And with all the licenses that I have, one of them is the fiduciary license. Our firm is a registered investment advisory firm. We absolutely discuss everything, compensation, the whole 9 yards is open for everybody to see.
So let's imagine now you're working with someone that is considering the 1031 exchange, and they're evaluating, do I pay the taxes now or do I defer them? How would you discuss the possibility of the tax liability increasing in the coming years, that the government actually increases the percentages and so forth? What would all of a sudden happen as I'm trying to evaluate that? What advice or considerations should I really be thinking?
Well, so there's a couple of things to consider that are definitely hot topics right now. So the 1031 exchange has been around since 1921. Now it has had modifications. And in fact, the latest one was in 2017, where they eliminated the other property. You could, if you were a farmer, you could 1031 exchange your farm equipment. You can't do that anymore. It's just the real estate now, right? And so there are certain laws that can change. Right now, the Biden administration is talking about raising the capital gains rate to 39.6.
That's right.
From the current 20%.
Correct.
Well, that's fine if we're doing a 1031 exchange, and we're going to, defer that also, right? Defer. And ultimately, if you defer until you die, then under present tax law, there is a step up in basis. But that's also being under attack right now. So that's been around since 1911, I believe. It's been even longer. But they are talking about reducing that for anything over $1 million.
Mm-hmm.
You wouldn't get the step up in basis. So those are real considerations that we need to talk about with your client and just say, look, under present tax law, this is the way it is. But the government can always change those tax laws.
Yeah. So in essence, I could be paying 20% today. And as you mentioned, you could, in theory, be paying as much as 39% later on in the future.
You could. One of the things that is available, and again, this will get into other probably topics that we could certainly venture out into. There is this thing called a Section 721 UPREIT. And so when you're working with these really large real estate firms that we do business with, these are multi-billion-dollar companies that put these programs together. They're all well-versed in the real estate investment trust world, the REIT world, right? And so if the government changed the law and they disallowed 1031 exchanges completely, then what they would do is at the exit, they would do an UPREIT. So they would push all of the equity into a real estate investment trust so that you would continue to defer the tax indefinitely, right, until you die or pull the money out.
Yeah.
And then if they did away with the step up in basis, then again, you would continue to defer, but ultimately your heirs would be stuck with the tax. So real considerations that need to be talked about. I am personally a fan of always defer if you can. Try not to die when the tax laws aren't great.
That's always good advice, I guess.
Yeah.
So let me talk about a similar situation as to someone having real estate, selling it, and wanting to maybe defer through the 1031 exchange. What about the clients that we're working with where the business owner is doing well and they have a lot of profit, and as such, they're considering their options as to what could they be doing to invest? What are their situations and options as you may see it from your point of view?
Well, we do a lot of different investment strategies that you won't get at the traditional brokerage. We look at things. I like real estate because it's bricks and mortar. You actually own something of real value. And so we do a lot of real estate investing in alternative funds where you're actually buying, like I have development deals where they're building storage facilities or senior care facilities. I have a company that flips apartments, all that kind of stuff. It's very interesting, very high return.
Yeah.
And so I kind of prefer going with new money into things like that. Now there's structured notes where you can earn above 20% a year and have, some underlying guarantees by the issuers, which are these really big banks. So there's a lot of things that you just won't get at the traditional brokerage firms out there if you work with a firm like ours. Again, we're independent. So we don't have the big corporate entity telling us what we have to sell to people today. And so we look for the things that really are the best for our clients to give them a sense of security, as well as a good return.
Perfect. Now, let me bring in maybe some stories that might be a little bit more illustrative of what we're discussing. Can you share with us something where the accountant brings in a client, introduces them to you, and how did that transaction kind of happened, and what came of it, and how that was beneficial to the client?
Absolutely. So, kind of the first situation that we see probably most often is where a CPA will bring somebody in, or a tax professional bring somebody in. They'll just say, look, I have this client. They're 75. They've owned rental properties for the last 30, 40 years. They really need to quit. They are getting to the point in age where they don't want to deal with it anymore. They would love to retire. Problem is they feel trapped in the investment because they rely on the monthly income.
Yeah.
Right. And if they cashed out, they would pay this significant capital gains tax and depreciation recapture.
Correct.
So what's the solution? And so we do recommend the 1031 exchange into these securitized real estate strategies. They're known as a Delaware statutory trust, and you'll hear us abbreviate it as to DST, and not to be confused with what's called a deferred sales trust. It's a completely different animal. That's some kind of sketchy stuff because none of us have E&O insurance on that. So I would stay with the Delaware statutory trust, where they actually own a piece of a big commercial piece of real estate.
Yeah.
Again, an Amazon fulfillment center, a CVS, a Walgreens, that's good real estate.
Now, give me an example of someone that comes to you and it's not the right solution, meaning the accounting professional brings a client over and you're considering an option. They considered, obviously, the solution of the 1031 exchange, but it just wasn't a good fit, just to illustrate that there are some options or choices.
Yeah, we had one, it was earlier this year, where the client came in and they had inherited this property. It was well over $1 million. They were living on their Social Security. They had no other income sources, and they're elderly. So they were like, hey, we don't want to pay the tax on this right now, but they had no other money. And so when we look at that, right, we have to tell them and their family, it's like, you have to pay tax on some of this and just put some money in the bank, because not only will we not approve it, but our broker dealer firm that, we're ultimately, they review everything we do, they wouldn't approve it. You have to have some liquidity. You got to remember, these are not liquid, right? Let's say you had $1 million and you put that with us in $100 million apartment complex.
Uh-huh.
We're not going to sell the $100 million apartment complex because you want your $1 million back, right? So these are not liquid. And so they have to be prepared to stay in the investment for 5 to 7 years, typically. Oftentimes they'll sell before that, but we want people to think long term. They're going to stay in this until we sell it, and then you get your money back and you can do another 1031 exchange. So when we have people come to us that are looking for liquidity, it's like, we're not the answer there, right? If you want your money back in 3 months, you want us to just park it with us or something, that will not work.
I love that illustration because I think that does demonstrate that point very, very well. So thank you. So let's get into kind of a little bit more of a personal type discussion here. You've been doing this, helping individuals. It's I'm sure just fascinating to meet some of these people that have high net worths, other individuals that are coming into a lifestyle that they may not have really expected, and they've been very blessed in what they're experiencing now. How is that working with these people at that personal level? What's it like having those interactions where these people are literally in a situation where their lives can change and you can be part of that experience?
It really has been a great way to live, honestly. So my son was involved in their industry for about 15 years. And finally he came to me and he said, this is like going to school every day for the rest of your life. And he exited. He was like, it's just, too intense. I love it. I'm kind of like, you can tell by all the licenses, right? I'm an information junkie. I just love the technology of it. I love what we do. And I've told many of my clients, I get educated by billionaires to teach millionaires how to grow their wealth.
I like that. And with that context, what is a lesson you may be able to teach the rest of us that are not yet billionaires?
I think the key is, again, to pay as little tax as you can along the way, and secure the assets, right? Too many times we'll see people that will do things that are, really outlandish. I've unfortunately seen people taken advantage of. I had, I'll give you two scenarios that were kind of strange. I had husband and wife clients that retired as nurses, but they had it was a great pension benefit. They each got about $1.5 million in retirement settlement, plus they had 401k. So they were probably worth $4.5–5 million, and they got involved in a Ponzi scheme and lost about $3 million.
Oh my!
And all the way along, I was telling them, this is not real. You the statements are fake. The guy's, he's created them on his letterhead. That's against the law. And, they were just suckered in by the high return and ultimately lost $3 million. And then I had another client that her husband died. They started working with us before he died. And then when he died, we recommended that she sell. It's about a $10 million apartment and do the tax deferred exchange. And her tax person said, no, I wouldn't do that. This is providing good income for you. And it's like, well, great. Everybody, different opinion. Well, it ends up somebody talked her into taking $1 million loan on it and investing in bringing an oil tanker from the Middle East to here. She was supposed to triple her money in 3 months, and that money's gone. And then, she's also being suckered right now. Her mom died, and somehow she's, it's one of these typical scams where, she's being asked to send $75,000 to, Hong Kong to get the money that she's inherited. It's like, that is like the typical scam. You hear about that one every day. How do you fall for that stuff?
Yeah, exactly.
So I see people taken advantage of that are wealthy. And I'm just like, how are you suckering for that? And one of the things I was just talking to one of my staff people today, on our documents, we ask for a, like, who would you like us to talk to if we think you're being taken advantage of? Like, maybe your kids or your accountant or whoever, right? And we did have another one where actually this guy is worth probably $50 million, and he needed his printer stopped working. So he Googled, repair my HP printer or something. And people got him to buy $45,000 worth of gift cards and scratch them and give them the codes and everything. It's just like, how would people fall for this? So, we want to make sure and protect our clients from those crazy things and show them real returns, right? These are not pie in the sky, crazy returns. These are real returns with real assets.
So when you're sharing these stories, one of the things that comes to mind for me is, as accounting professionals, we're also seeing these types of experiences, business owners doing some crazy thing, whether it's in the business or personally. And we as accounting professionals sometimes just have to scratch our head only because it's their decision. And we're able to advise them, much like you're advising them. But it's interesting, the perspective. It's almost like what appears to be obvious to us isn't necessarily always black and white to the person that's in the middle of it all. And I don't know if it's because they get the big eyes and they get excited about the reported gains that they could maybe get from whatever they're being asked to do. I don't know what beguiles them, but you're right. There's something that becomes shiny and they just kind of fall for it. One of the things that I'd like to know is, as advice, you're speaking to accounting professionals. They're working with clients that do have assets. They do actually have profits. What advice do you have for the accountant as they're now considering how they can step into more of an advisory role with that relationship they have with their client?
Well, I again kind of think if you look at, instead of the kind of the transaction of, time for money, and look at it as value for money, then, all of us have knowledge. And, I like to say that, hey, you can sell your knowledge for profit, and it's okay, right? Because in the end, everything that we do, and it's not physical, it's what we know. And so when you take a look at saving somebody, again, let's tone it down. What if you save somebody $25,000 in tax or $50,000 in tax? That's still a significant number. You could easily charge somebody, $2,500 to save them $25,000. And so you have to set the stage for that and let the clients know that, the way you're going to work with them is on an advisory capacity.
Exactly. That again is an excellent example of offering a true value service. And in doing so, they're paying for the expertise and the knowledge that you've acquired, the licensing that you've received. They're paying you for the experience that you bring to the table. And so I think that's, again, a great example of how as accounting professionals, we sometimes need to remove ourselves from the hourly or transactional element of what we're doing and really consider the value we're bringing to the table. So I appreciate that a lot.
You bet.
Let me switch gears again, and let's talk a little bit about you. You've been doing this for a number of years, as you've mentioned. How has this impacted your life? What are you grateful for?
Oh, I'm grateful really for the opportunity to work with the people I work with. I'm grateful to be in this business. We just finished with the COVID crazy lockdown and all that. Because we're in the financial industry and, people need access to their money, we didn't shut down at all. We were here every day. And I'm grateful for that. I'm grateful to be self-employed, to be able to be in the driver's seat and not be told, I've got to sit home and work from home. So, this business has been really a blessing in my life. I mean, I've got great family and we have a lot of fun. As you kind of mentioned in, my background, we go boating. I'm taking tomorrow off, Friday. I'm going to take off and take my daughter and her family, my grandsons, the oldest one's almost 17. We're going to go out and have some fun and, do a little wakeboarding and wake surfing is kind of the new hot thing, and just enjoy life. And I think that's the key, right? We've all got to be able to take some time to smell the roses a little bit.
Well, what you're referring to is whether or not we're working to live or live to work. It's that's a mental state, and it sounds like you're definitely working to live so you can go out and enjoy and take advantage of so many of the things that the world has to offer. And I like that. And you're right. The boating and everything, that's just a nice diversion, and to be able to do it with family, that's amazing. Just kind of curious, what boat do you have?
So I did trade out my last year. I sold my ski boat, my water ski boat. I've been just an avid water skier for years and years. Had a Taiga competition ski boat for 26 years. So I'm not, flipping things there. So it was just a great boat. But I did realize how selfish I'd become, because nobody else really wants to water ski these days. It's definitely a lot of work. And so it was like, okay, it's time to get a wakeboarding boat. And so we did get a Access A24. It's a 24-foot wakeboarding and wake surfing boat. It seats 14 people versus my other boat. It really would seat like 5, maybe.
Yeah, that's quite comfortable. I like that.
Yeah.
Tell me about your Harley. Where do you go riding, and what do you ride?
Well, one of the beautiful parts about California is the weather is nice. We pay for it here. I will tell you that. It's not free. But it's beautiful around Northern California. You can I can be into the Sierras in 30 minutes and up and just see the beautiful mountain lakes. And we can be out into Napa and the wine country in 45 minutes to an hour. So we're kind of strategic. We laugh about Sacramento. Sacramento is not a destination, right? You don't go, oh, I really want to go on vacation to Sacramento. But it is close to a lot of things, right? We're an hour and a half to Tahoe or Reno or the Bay Area, or so it's close proximity to a lot of fun stuff. There's a lot of back roads that you don't get on a motorcycle and go on the freeway, right? You get on a motorcycle and you find all the back roads.
Yes, very, very true. And what Harley do you have?
So it's a 2004 Road King, and so it's a 100th anniversary. Chrome everywhere. It's beautiful, beautiful motorcycle. A lot of fun.
Nice. Does anyone else in your family also have a bike to ride with you?
No, not at this point. They've had some. My son, he moved to Texas. He's in Austin, Texas. I used to say, people are lucky that live there. Now I say they're smart, right? They've moved out of the high tax California.
Yeah.
But so he's had motorcycles on and off. And then I did buy some dirt bikes for my grandsons. We did that for a couple of years. They're not as, they're not as interested in it as I was. And I'm getting a little older. I probably shouldn't be doing some of that stuff. So I did tone that down. So,
well, that's what I do. Right now do the off-road, and dirt biking is quite fun. And you're right. My mind thinks I'm definitely a lot younger than my body sometimes feels. But I just went about 3 weeks ago on a more than 100-mile dirt bike ride. And then the week before that went on nearly 150. No, it was close to 200 miles on the dirt bike ride. So some wonderful back in the mountains, beautiful scenery. It was just gorgeous, and it's quite fun. So I'm still on the dirt biking thrill, if you will.
No, it's great. I grew up doing that and loved it. And, I did, it was the bike I got was a 450 Kawasaki race bike thing. It was probably bought way more the bike than what I needed.
Uh-huh.
And, I noticed, myself starting to take jumps and things. And I'm like, yeah, I probably shouldn't be doing this.
Yeah, I'm not doing the jump, so I'll give you that one.
Yeah.
Let's talk about freedom. You were talking about obviously being out on the boat, riding the bike. You were talking about these destinations, getting out. Tell me what freedom means to you.
Well, I think it really is the ability to get up every morning and choose what you want to do today. And, even as we work with, the other professionals that we partner with and our clients, right? I think we're all looking for the same thing. It's not the lack of, having to, well, I think it's not having to work, it's having a choice to work.
Mhm.
Because many of my clients, as they are older and, I'm 64 at this point in time, I don't want to retire. I just want to have work be optional. And I think that's freedom.
Yes, love that. Well, what I'd like to do here is just break away for a quick moment and summarize what it is that we've been discussing with Jeffrey and a lot of the little insights that I took from today's conversation, and then come back and Jeffrey asked for a closing thought on your part. As for today, though, I'd like to also point out from our sponsor, Universal Accounting Center, that you too can become what's referred to as a profit and growth expert. So many of our clients that we're working with are dealing with a variety of things that may inhibit their ability to be profitable and leverage the various things that they can be to increase their profitability. Becoming a profit and growth expert allows you to focus first and foremost on the principal or primary thing that they're oftentimes struggling with, which is cash flow management within their organization. After now addressing that, you're then able to actually apply very specific principles to help them remain profitable and, in fact, apply things in their business that allow them to make profit deliberate and intentional. So become a profit and growth expert. And with that certification, complement your services right now so that you can, in fact, offer these value added services that we were describing earlier. And in fact, become for your clients that profit and growth expert that they need. Now, with that being said, let me just summarize a few of the highlights that I took from today's conversation. The first being that working with our clients as accounting professionals, we have the blessing or the opportunity to see individuals actually do well financially. And whether they've acquired assets or have assets to liquidate, what we need to be able to do is help advise them as they're especially trying to consider the tax liabilities that they may be facing and what options they have. And one of those that came up in today's conversation is obviously that of the 1031 exchange. It gives them the opportunity to take perhaps some of the assets they have and defer their tax liability and really get an additional investment that they can now kind of live off of and do so perhaps through the rest of their life. And I think Jeffrey did a great job of explaining some certain scenarios that would afford that option. The other thing that I thought Jeffrey did a great job pointing out is it's the value added services that we're oftentimes looking for. Really, what are we doing when we bring our experience, our knowledge to the table, the discussion here that really impacts them at basically tens, hundreds, if not millions of dollars. And that information that we're bringing, what can we do to then be compensated fairly for that experience? And that may involve value pricing. That value pricing means for what we brought to the table, it's not the time that it took to actually administer that transaction, but more importantly, the knowledge and expertise that we brought to facilitate that. And in doing so, we can be earning not hundreds of dollars, but thousands of dollars or tens of thousands or more for the work that we're actually doing. And Jeffrey is a great person to reach out to that perhaps can assist and offer that type of a service to complement what it is you're doing with your clients as well. So I appreciate that. And I encourage you to go to the episode description and find out more how you can become a profit and growth expert, as well as a little bit more about what it is Jeffrey does as he works with his clients to obviously defer some of these tax liabilities and remain obviously in a very cash positive, asset positive situation. So, Jeffrey, what closing thoughts might you have for our conversation today?
Well, I think one of the key things is that we all need to be educated about, a lot of things, but I think the real estate is an area where most of our clients have assets. And so I've written a book, Are You Tired of Tenants, Toilets, and Trash? And it just explains how the 1031 exchange works, and it gets into detail about the Delaware statutory trust. I'd love to offer that to your listeners, no cost. If they just, reach out, we'll send them a copy of it so that they can get educated. They can certainly get a copy for any of their accredited investor clients that own real estate that may be wanting to do a 1031 exchange, and really start the process of helping your clients really retire.
Perfect. And what I would encourage everyone to do is go to the episode description, and there you'll find the information you need to get a copy of Jeffrey's book so that you can actually learn more about this and see what you can do to be offering these quality services as well. So with that being said, I want to thank everyone for listening. I think today was an excellent discussion and very appropriate for us as accounting professionals, because what we're trying to do is always this. Remember, building this premier accounting firm in your area. Why? Because accounting success is universal. I encourage you to listen to our other episodes and definitely subscribe to this podcast, as we actually post at least weekly new and updated discussions for you to actually learn what you can be doing to work on your business and offer these quality accounting services to your clients. For more information on how you can apply these principles in your business, please visit us at universalaccountingschool.com or give us a phone call at 801-265-3777. And always remember this: if it's about accounting, it is universal. Take care and have a great day, everybody.